Hello and welcome to BQPrime. As the Indian economy has recovered from the pandemic, the labor market has perhaps been the slowest to recover. Even now, if you stitch together indicators coming in from the CMIE, data coming in from the government's periodic labor force survey, and other indicators like employment under the Manrega scheme, you come away with a picture that the process of repair there is far from complete. But just to give us a sense of what the numbers are now looking like, Mr. Mahesh Vyas, MD and CEO of CMIE, is joining us here. Mr. Vyas, thank you so much for taking the time to speak to us.
My pleasure. Thank you.
Mr. Vyas, let me start with the immediate numbers. I think your editorial in the Business Standard said that the month of June was disappointing in terms of the employment data. Can you tell us what you have taken away from the headline number that employment fell by 13 million, I believe you said? If you could give us a little bit more color on what's going on there.
In the months of April and May, employment did increase month after month. And it was a good increase. About 8 million jobs were added in April and May. And it looked like the economy is coming out of this big problem. We'll recover back to pre-COVID times. But then June disappointed. We did expect June to not do very well because it's seasonally a problematic month. If the rains get late, then employment does suffer in rural India. And that's exactly what happened. So rains were a bit late. Deployment of employment in rural India was delayed, and the numbers kind of crashed. So it is a bigger fall in employment than we had anticipated. So 13 million jobs lost, almost all of them in rural India, was rather disappointing.
Okay. The urban job numbers look, are they extending a trend of repair in June, along with what you've seen in previous months?
Urban India did not show any deterioration. It did not show any loss of jobs also. It saw a very small increase in jobs. So it's like this, that the pain in agriculture or rural India was so big that we just can't stop to complain about urban India not generating enough jobs. Urban India did not do great. It just generated 0.1 million jobs, but we have many more people coming into the labor market. So urban India and India as a whole needs to generate a lot more jobs than what even urban India did. But there was so much pain or so much of disappointment in rural India that overshadows the small gain that we had in urban India.
Our best guess right now is this is linked to agriculture and the sort of late or patchy rains that we saw in June. While there's no way to guess, but if one just puts aside that possible factor, were there any other disappointing aspects of this data from June?
Not much. So June did see a big fall in agricultural employment, but there were falls even in the industrial sector and the services sector. Small falls, but nevertheless, there were declines in all the major segments, all the major sectors of the Indian economy. So small gains, which were not big to write home about, but we expect industry and services sector to continue to grow, to provide more employment. That did not happen.
Ms. Vyas, over a slightly longer period of time, say the last 6 months, when we've been talking about a recovery in the economy, including now finally in the services segment of the economy, how is the pace of job creation comparing to, say, pre-pandemic times? Although even pre-pandemic times, we were in a slowdown. But what would be the right comparison to judge whether the pace of job creation has caught up finally?
I would say that the catch-up to where the jobs were before the pandemic is not too bad.
Okay.
But we need to grow beyond that. We have still not reached the employment level that we were at before the pandemic hit us. Okay. So we were at about 408 million jobs in 2019-20, and we are still below 400. We did touch 405, 406 million, but we have never touched 409 again. So there was a big hit. There was a very good recovery. The hit was very big. So, when there's the lockdown, people who just don't have salary jobs like you and I have just are unemployed. So all those jobs came back. They came back rapidly. But that was a reflection of the informality of our jobs, mostly in India. Informal jobs come back very soon. If I lose a job at CMIE, I can't get another one very easily. But whereas the cart pusher down the street can go back and push his cart. So that recovery was good. But beyond that, it is sluggish. We're not able to go back to where we were.
Absolutely. If I just draw a link, although I know that data sets are not comparable, but some of the takeaways that came from the PLFS, one of them was that the pickup in reliance on agriculture, which is, picked up again in the last couple of years, still remains above, the last, say, 3 years back. Similarly, jobs or reliance on the informal sector remains high. So those sort of, indicators suggest that even while the economy is starting to chug along, perhaps at a better pace, the labor market is still weak.
I will say that the labor market tells you a story which is more comprehensive than any other indicator of the economy.
Okay.
A household survey that the PLFS does, or that CMI does, the CPHS of CMI, covers the entire country.
Okay.
So whether it is informal, formal, organized, unorganized, all those workers stay in houses. And we do a household survey. So the most comprehensive indicator that you get for the Indian economy is one which is based on a very large sample, which goes across to all segments of the Indian economy. And that, whether it is PLFS or CPHS, shows that the recovery has been sluggish. Now, what is happening is that the informal sector is not growing fast enough. It has taken a big hit. The formal sector, the organized sectors are doing well, and therefore you see the stock markets booming, the Indian listed companies having record profits. So the organized sectors are doing quite well, but the informal sector is not doing well, and therefore people are moving into agriculture, and that's actually, we all know, is disguised unemployment.
Do any of these indicators give us a sense of wage growth, Mr. Vyas, at all? In developed countries and some of those economies, you do get a sense of how wages are growing or not growing. In India, what is the best way to judge that?
We do have wages data. So when we go and collect data on employment, we also get data on wages. We do know whether households are earning income from wage labor or from transfers from government or private transfers or from business profits. So we do collect a lot of information on wages, and what comes out from there is that the wage growth is as slow as the growth in employment. So we are not doing better on wages while we are not doing good on employment. So households are taking a hit on both fronts, wages and employment.
And on inflation, so I was linking it to inflation. One would, in theory, one would say if inflation picks up, second round effects could flow through via wage inflation. But as yet, there is no indication of that happening, which means it's a double whammy.
More than that. So we have employment not growing, wages not growing, inflation rising, and now interest rates rising.
Not a pretty picture. A couple of other indicators, Mr. Vyas, again from your essay and your data. The labor force participation rate is something you've been writing about, and that seems like it's not picking up very consistently either. It seemed to have risen a little bit and then fallen again in June.
So we shouldn't read the June fall too much, because I think this will get repaired when the rains come back, as they seem to have come back, and employment in agriculture will go up. Labor participation rate will get back to close to 40%. But that's where we are. 40% is where we have been as a part of our recovery from COVID. So we were at 44%, 45% before that. So in the last 5 to 6 years, labor force participation rate has fallen from 44, 45% down to around 40%. So the June number is 38.8% or so, but we shouldn't read too much into that. It'll come back to close to 40%, but we should worry that 40% is not good enough.
What will it take, Mr. Vyas, to sort of inch it back at least towards, say, 44% or so?
3 things. Investments, investments, investments.
Okay.
We just require investments to pick up, and investments needs to pick up in the private sector in a big way. And just a few projects coming up here and there in infrastructure is not good enough. For example, a lot of the investments which are happening recently, which is good but not good enough for employment, is roads. So you build a road, you will employ people to build the road, but then it doesn't employ any more people. You build a factory that produces steel, cement, textiles or something. There are people who build that factory and then to run the factory. So we require investments to happen in manufacturing sector and the services sector in a much bigger way than we are doing right now. Right now, most of the investments are in infrastructure that doesn't help much.
Which brings me to your data on new project announcements. Is that giving us any glimmer of hope that there is a pickup on the private investment side? The sort of premise that the government is working with is that if they step up capex, eventually they'll crowd in private investment. Is there any indication that that's going to work out?
So on the face of it, it looked like that there are good investments happening in the month of in the quarter ended June, but when I looked at the numbers more in detail, I found that most of the investments were of Indian entrepreneurs going to Davos to meet state governments over there to announce projects in India. So it's more the optics and not the projects. I'm being skeptical, but pardon me for that, but that's not done. That's not what investments was in the 1990s or even in the 2004, 5, 6, 7, 8 era, when people were falling over each other to set up steel plants, cement plants, all kinds of things. That's not happening as yet. We require that. We require to reach that mad pace of over-investments. And that's the only way it happens.
So the data, sir, just to clarify, the data of new projects that you put out, that captures the announcements, not sort of breakground.
Okay. So an announcement only if it is a real project. If somebody says, I'm going to put some $1 billion into India, but doesn't say where, we don't take that into account. It could just be a takeover. We require to have the person say or the entity tell us that it's a project somewhere doing so and so, putting so much money. So it could be a steel plant in some part of Karnataka or somewhere of the kind, and we require at least that much.
Okay. Mr. Vyas, the private investment story, is this still about sort of the level of capacity utilization, although that has started to move up? And in certain industries, data suggests that capacity utilization is now at a point where you should see fresh capacity coming up. Is that still the story which is holding back large private investments, or are there other factors to your mind? Global uncertainty, local uncertainty, interest rates?
It is largely capacity utilization.
Okay.
Other factors are there. Global uncertainty, etc. is there. But the biggest factor, in my opinion, is low capacity utilization. Many sectors, steel particularly, and some groups have done a lot of investments. JSW, for example, has invested a lot into new steel capacities. There have been new capacities in cement as well. As their capacity utilization touches a certain level, they do go out and create new capacities or announce new ones and actually even complete them. But for the rest of the economy, there isn't much. And even the ones which are there in steel and cement is not big.
They don't move the needle for the overall economy. What's the story or what's your impression of how this push from the government on capex is going to play out? Last year's budgetary allocations were large. This year's are even larger. If it gets sort of put onto the ground, it should start to pay some dividends, or are you skeptical?
Well, the public finance data for April and May show that the government did spend a lot of money on capex. They did get good monies from taxes, and they did spend money on capex. They have promised repeatedly that they will spend a lot more money on capex. I think that's very good. I think that's inadequate. Okay. That's not going to spur private sector to start investments. That's unlikely to happen. So the government, for example, this is not exactly the case, but nevertheless, if the government says, I'm going to spend a lot of money into, say, road building, and that's where they're spending most of the money, then some infrastructure companies will get those projects, and it'll look like some capex is happening. Their market capitalization will go up. But that's not going to move the economy. For the economy to move, we require demand to pick up a lot more. We require entrepreneurs to feel enthused, to take big risks, to go and produce goods and services for the competitive markets, not infrastructure which is covered by the government. You can have a very large project. For example, Rajasthan had many projects in green energy, but that's not competitive markets enough. We require steel, cement, automobiles, textiles, chemicals, the works, to be a lot more aggressive, spread all over the country.
There is also an uncertainty on the states front, isn't there? I mean, with GST compensation sort of going out, although currently their cash balances, I believe, are high, but still there would be some uncertainty which could prevent state capex from playing out as budgeted.
Yes. Go back to 91, 92 and look at the uncertainties there. What happened? The uncertainties, India was almost bankrupt. And overnight, we were enthusiastic to invest. Something changed. That's the magic we require again.
What will be the ingredients of that magic?
I don't know. I'm not a policy prescription person.
Okay. Just want to sort of also draw, you talked about, demand in the economy. You measure consumer sentiments as well at CMIE. What can you tell us about how the consumption economy is looking from a sentiment viewpoint right now?
Of all the indicators in the Indian economy, the consumer sentiments has been the slowest to recover. It has been recovering. Whether you look at the RBI's consumer confidence survey or you look at the CMI's consumer sentiments survey, both of them tell us that the recovery in sentiments has been far more sluggish than the economy as a whole. We are growing at 7% or maybe 8% or thereabouts in this year, and sentiments are still lower than they were in the pre-pandemic times, whether you look at RBI survey or CMI survey. That's because employment is not good enough and wages are not good enough. So household incomes are still sluggish compared to where they were. Perceptions regarding households' income is not good enough. But what has happened in the recovery process in the last 3 months or so is that households have become unusually negative or less optimistic regarding their own future. So one interesting thing of the pandemic times is persistently, households have said that we are badgered, we are in a bad shape, but we are hopeful tomorrow will be better. So the answer to the question, do you expect your incomes to be better a year from now or 5 years later, was always better than what they were today. That has flipped. They are not as optimistic about their own future, although their current income has improved. So, which is very intriguing, disappointing, and I think it requires action over there. Why are people not as optimistic or as hopeful as they were 6 months ago? In the last 3 months or so, more from, let us say, even January or so, but more so since April, they have become less optimistic about their future. And also, to a question on, do you think the economy as a whole is going to do well in the next 5 years? The answers are less optimistic than they were earlier.
That's very interesting. So then that should manifest itself perhaps in behavior of saving more, spending less,
Yes.
Although, within sort of limited income growth, I presume.
Yes. So I think we need to worry about the sentiment. Something has flipped. A, the recovery was slow, and then their optimism on the future has taken a beating. So we require to build perceptions. We require to build a story of the Indian economy, which is more promising, which is more, growth-oriented, more aspirational.
One part of that, actually, interesting you say that earlier in the year, there was much optimism that the startup story is going to be where the optimism comes from. Jobs, at least anecdotally, were being added in that sector. Salaries were sky high. I know it's a very small part of, the overall labor market here in India. But even that seems to have flipped now, given what's happening globally. The funding environment has turned, and hence even that optimism seems to have dropped a bit.
Yeah, that's very disappointing. Extremely disappointing, because many of those startups did create lots of jobs, all kinds of jobs. But if those jobs also start drying up, then you see what has happened in June. The story of the startups kind of imploding, in a sense, it's a overstated word, but nevertheless, for a lack of a better one, if the startup world is imploding, and if the government says we are not going to hire as many army men as we were hiring in the past, middle classes are really, really in a bad shape. They were aspiring for these kind of jobs, and they are seeing these jobs not necessarily happening.
That is interesting that you bring that up, Mr. Vyas. I mean, those protests that sort of stemmed from the government's announcement on change in the nature of military employment. Where do you think that came from? I mean, the politics apart, if you look at just the share of government in employment creation, government jobs, it's not that large. Yet it probably gave us a sense that the premium on these kind of jobs, the surety of these kind of jobs is very high given the overall weak labor markets. Is that the right interpretation? I don't know.
I have learned a lot about this. I didn't know enough about this, and so many people have written such insightful essays in the media that I've learned a lot. So I owe it all to them. What I take away from here is that there are pockets, and in those pockets, army jobs are very important. So these are the people who are not going to go to college and go to do an MBA course. These are not the people who have got necessarily adequate land. These are not the people who have got other sources. Their best bet in life is an army job. So in those small pockets, and they're mostly in the northern belt, it's extremely important. So when those jobs go away, it takes away the hopes of an entire large neighborhood. Like take a town outside of Delhi as Palwal. It makes a huge difference to Palwal if the army does not absorb people now, not as many as there's. So it's not the jobs that have gone, it's the hopes that have gone. And I think that's had a big impact on many parts in Bihar and Uttar Pradesh. And even in Telangana, it showed up in a big way. So the jobs in numbers are small, like the jobs that, let us say, Baiju will give you or other startups will give you is small, but the hopes they create has got a big multiplier effect.
There was a parallel, although separate, announcement that the government will step up filling of job vacancies. These are not new jobs, but they will fill them in a shorter period of time. Does that move the needle in any way?
If it happens, it will.
Okay.
If I remember this right, it is 1 million jobs the
Yes.
Prime Minister's office announced in 1.5 years.
Yes.
That's big. If they do that, and these are government jobs, so that's going to move the needle in a big way. So I hope that happens.
Let me then just get a final word from you, Mr. Vyas. It's early in the year, early in the fiscal year, I know. But as things stand, stitching together the data you have from your consumer surveys, your labor surveys, and also what you know of your study from corporate earnings, etc., what does the year look like to you economically at this time?
It's not an easy thing to predict, and I don't want to sound like I really know it. I actually don't know much. There are too many uncertainties. Russia, Ukraine is not the only one. Interest rates overseas, inflation is sticky in many parts of the country. The employment scenario in the world is weird. I don't understand that much. So the world is a lot more complex in a completely new way than we have seen or anticipated. And that skews the situation over here. The employment situation is predicated on the investment scenario, which isn't moving much. So I think India will still continue to grow by around 7% or thereabouts, but I don't think the living conditions of Indians is going to change much.
Mr. Vyas, I'll leave it at that. Thank you so much for taking time to share your data and your insights with us here on BQ Prime.
My pleasure. Thank you so much.
Thanks for watching BQ Prime.